In the first video that I dropped, I explained in details what is meant by partial budgeting and how to calculate it step by step. And also in today's video, I'm going to be doing that. However, I might not provide comprehensive explanation, but I want you to go back to the channel and watch the one that I first dropped. Thank you very much for watching the video. Now let's proceed. First of all, I want us to, as we are reading this question, I want us to write every of our costs that we have in this question. This is the question I'm going to be solving. I want us to write every cost that we have. As you know, all these prices that you have here is divided into cost and income. Yeah. So I want us to write every cost in one places, and that's what I'm going to be doing as I read out the question now. Now let's proceed. Mr. Osasuna, a livestock business manager, intends to acquire additional 50 beef cows to an existing farm. Now, in my previous video, I explained to you that partial budgeting deals with the cost that anybody, either a farmer, an entrepreneur, will be incurring as a result of changing from one enterprise to another. That cost, it deals with cost. And if you look at this question, when you want to compute partial budgeting, the first thing to do is to have your title. Yeah, you must have your title. And if you want to put your title has marks. That's it. You must have your title. For in this case now, I know that this the name of this farmer is Mr. Osasuna. Now, the question now proceeds and says that a livestock business manager intends to acquire additional 50 beef cows to an existing farm. So the proposed change will become the title of your budgeting. Are you getting it? The proposed change will become the title of your budgeting. In this case now, if I want to write the title of this, I can proceed and said proposed change will be addition of 50 beef cow. Addition of 50 beef cow and conversion of 100 hectares of land, 100 hectares of farmland, 100 hectares of land that which is from grain production to forage production. That will be the proposed change. As you can see, the question says a livestock business manager intends to acquire additional 50 beef cow. From this point like this, from this point, additional 50 beef cow to an existing farm. That's the first thing that you want to do. You want to add 50 beef cow. Then after that, the forage will not be enough because addition of 50 beef cow will cost and aim to incur another cost on forage. Therefore, so he intends to convert the 100 hectares of land that is currently being used for grain production into forage production. Have you seen the changes that he want to make on the farm because of the because of what he want to do? He want to have 50 beef cow, so he had to what change convert the 100 hectares of land that is currently being used for grain production to forage production. As you know, what cows need is forage. Yeah, they need grasses to grow. So you want to convert 100 hectares of land that is used for grain production into forage production. So if you look at these changes, the first changes is what addition of 50 cows to the farm, and then after that, the second change is what conversion of 100 hectares of land that is being used for grain production into forage production. So that is the proposed change, and that will be the title of your budgeting. So the proposed change now will be in form of this: addition of 50 beef cow and conversion of 100 hectares of farmland from grain production to forage production. Have you seen that? That's carries mark. So let's proceed with what I'm saying. Okay, now let's proceed. Now this is the proposed change. I've written it here. The addition of 50 beef cow and conversion of 100 hectares of land from grain production to forage production. Now, let's proceed with our question. Okay. Now, that's the proposed change. You have written the title, which the title is this is the title, the proposed change, and all this. So now let's proceed with the question. I told you that this all the prices here is divided into cost and income. Are you getting what I'm saying? So, and in our partial budgeting, we always have 6 tables. I mean 2 tables. Yeah, we always have 2 tables, and these 2 tables comprises of the additional cost. The first column comprises of additional cost and reduced income, and the second one comprises of additional income and reduced cost. What is additional cost? Additional cost is the cost that the farmer or the entrepreneur will be incurring as a result of changing from one enterprise to another. As a result of making a change in his enterprise, the cost that is going to be incurring is known as what? Additional cost. Now, this additional cost is divided into fixed cost or variable cost. Don't worry, I'm going to be explaining that. Now, let's proceed to reduced income. The reduced income, as you know that the farmers, the entrepreneur, and is generating an income before, but as a result of the proposed change, you won't be able to generate such income before again. So that income is known as a reduced income, the income that the farmer will not be making as a result of changing from one enterprise to another. That is the reduced income. Now let's produce the additional income. Additional income, when the farmer change from from one enterprise to another, the income that is going to be generating is known as the additional income. Why the reduced cost is the cost that it will not be incurring as a result of the proposed change. The cost that is incurring on that enterprise that is doing before changing to a new enterprise, that cost, it will not be incurring it again. So that type of cost is known as the reduced cost. Don't worry, I'm going to be simplifying this in my solution. Just pay attention and follow me carefully. As I have already told you, on all the prices that we have here is divided into cost and income. So I'm going to be listing all the prices. That's the first thing I'm going to be listing. I'm going to be listing all the prices. And don't forget, when we talk about cost, we are having fixed cost and what? Variable cost. We have fixed cost and variable cost. What's fixed cost? Fixed cost is the cost that is incurred even before the farmer starts to what? Making profit. The cost must be there. So let's proceed with our calculation. The first thing, let's look at the first prices here. Okay, let's from this place. Each beef, each beef, each beef cow will cost 30,000 naira. Yeah, each beef cow will cost 30,000 naira. So I'm going to be highlighting the cost of each beef cow now. Cost of beef cow. So cost of beef cow. The cost of beef cow is, don't forget, that is what, 30,000 naira. 30,000 naira. So let's proceed. The next one is how the replacement will be raised and not purchased, but is expected to incur a depreciation plus interest charge. The depreciation plus interest charge of 9,000 naira. So I'm going to be writing that also. Depreciation plus interest charge. The depreciation plus interest charge. That is 9,000 naira. Let me use marker. 9,000 naira. So that's the value. Now let's proceed with our calculation. The property tax which he will pay on the proposed change is expected to be the property tax is 3,000 naira. So I'm still going to be having the property tax. The property tax is 9,000 naira. Not for no 3,000 naira rather. Sorry. 3,000 naira. And let's proceed. The additional annual charge on pasture, fertilizer, and maintenance of the pasture is 45,000 naira. So pasture and fertilizer, let me put it like that. Pasture and fertilizer. Fertilizer, let me put fertilizer. Okay, fertilizer. The pasture and fertilizer is 45,000 naira. 45,000 naira. So now let's proceed. There are also miscellaneous expenses arising from the change to the tune of 3,000 naira. So I'll call that miscellaneous expenses. Miscellaneous expenses. Miscellaneous expenses. Miscellaneous expenses is that is 3,000 naira. 3,000 naira. 3,000 naira. So the miscellaneous expenses is 3,000 naira. Okay. Hauling or transportation. Hauling is also known as transportation. So hauling and transportation will cost 6,000 naira. So 60 hauling and transportation will cost 6,000 naira. So I'm going to be having hauling and transportation here also. Hauling. Let me use hauling. Hauling is 6,000 naira. So hauling is 6,000 naira. So the next, let's proceed with the question. After hauling and transportation, the cost of feed and hay is estimated at 60,000 naira. The cost of feed. Okay, the cost of feed and A is estimated to be 60,000 naira, while the expenses on veterinary and health is 15,000 naira. I'm going to write that 60,000 naira cost of feed and veterinary and health is 15,000 naira. Cost of feed, let's proceed. The cost of feed, cost of feed is 60,000 naira. The cost of feed is 60,000 naira. 60,000. So we have the veterinary and health, veterinary and health, uh, veterinary and health, um, health, veterinary and health will be that is, let me check. Veterinary and health is 15,000 naira. Yeah, 15,000 naira. 15,000 naira. So I have listed all the costs. So I've listed all the costs from this place to this place. So now I want you to all these costs, as I told you already, that this particular all these prices, all the price here is divided into cost and income. So I have already list all the costs that I have from this to this point. So I want you to note something. All these costs is divided. These costs are divided into fixed cost and variable cost, and that's what I'm going to be doing now. I'm going to be identifying the fixed cost and I'm going to be identifying the variable cost. Are you getting it? So let's proceed with our calculation. Now, if you look at this, the cost of beef cow, I told you that the fixed cost is the cost that the farmers, the entrepreneurs has incurred before even making any profit. So this cost, example of this cost is the cost of beef cow, of course. Cost of beef cow is a fixed cost. Are you getting it? Now, the next one is depreciation plus interest charge. This cost is also incurred even before the farmers start making profit. So it's also fixed cost. Property tax is also fixed cost. Fixed cost. And pasture and fertilizer is a variable cost. Pasture and fertilizer is a variable cost. So variable cost. Miscellaneous expenses is also a variable cost. This cost varies. Hauling and transportation is also what? A variable cost. Are you getting? Please follow me carefully. Uh Cost of feed. So we have now veterinary and health. So we have veterinary and health. Veterinary and health is also a variable cost. Yeah, the cost can changes over time. So I'm going to have here variable cost. I'm going to put variable cost on that. Variable cost. So that will be what? Variable cost. So the next cost on our question, the cost, the yield for his new business, and yield is also known as what? Income. So if you look at this question very well, you will realize that the next cost now is after the veterinary and health is 15,000. I've written that. So now the question I proceed and say that the yield of the new business is expected to be as follows. Now, I want to pay attention. Yield is also known as what? Income. Are you getting it? So we have 6 core cows at 72,000 naira. That's the first yield. So let me put another thing here. So I'm going to be having yield of the new business. Yield of new business. The yield of the new business. Now I'm going to first have the yield of the first yield is the yield of the new business. The first yield is 6 core cows. 6 core cow. You can sell those cows at 72,000 naira. 72,000 naira. So this income 72,000 naira. Then after that we have another one. After the 6 core cows, we have 23 steer cows at 217,350. 217,350 naira. So 23 steer cows. 23 steer cows. The price for that is 217 naira. 350 217,000 350 naira. So after that, we have the what? 17 Eifa cows at 137 naira and 137,100 naira. 17 Eifa cow, 17 Eifa cow at 137 naira, 37,000. So after that, After 17 as at present, the 100 hectares of grain production currently yield. So now I'm going to be having another table like that. That will be the another I'm going to be having another heading like that. That will be the what? The yield of the yield from the hectares of land. The 100 hectares of grain production currently yield 2,600 kilogram of grain. So I'm going to be having another heading. So let me represent that as I represent that as yield from grain. Let me put it like that. Yield from grain. Let me put that yield from grain. That is the first yield now is 2,600 kilogram, and these 2,000, each kilogram is sold at 120 naira per kilogram. So I'm going to be having the yield from grain is 2,600 kilogram, 2,600 2,600 kilogram, and this is sold at 120 naira per kilogram. So that's the selling price of each kilogram in kilogram. So now let's proceed. The cost of producing the grain are as follows. Now you want to make it to fertilizers, that is 75,000 naira. So I'm going to be having fertilizer. That will be fertilizer. That will be 75,000 naira. 75,000 naira. So after fertilizer, if you look at the question again, fertilizer 75,000 naira. So we have seed. The cost of seed is 30,000 naira. So we have seed, which is what? 30,000 naira. 30,000 naira. 30,000 naira. So after that, we have herbicide 15,000 naira. Herbicide 15,000 naira. 15,000 naira. After herbicide, we have machineries expenses. That is 24,000 naira. Machineries expenses. Let me just put machineries. Machineries expenses. That's 24,000 naira. So machineries. Let's put it like that. Machineries, that's 24,000 naira. So machineries is 24,000 naira. And don't forget the machineries 24,000 naira. Now the labor cost will not be affected. Yeah, okay. The ruling interest rate in the market is 5%. Now the question says prepare a partial budget and comment on the proposed change. Okay. Let's write out the ruling interest rate, which is 5%. So the ruling interest rate, let me put it, the ruling interest rate, interest rate, that is what? 5%. Now I want to pay attention at this point. As I will solving this question right now, I will start from the first cost, which is the cost of beef cow. Now the farmer want to acquire 50 beef cow, but the cost of a beef cow is what? 30,000 naira. Therefore, if the cost of a beef cow is 30,000 naira, how much will be the cost of 50 beef cow? That's what I'm going to be calculating first. The cost of 50 beef cow. The cost of 50 beef cow will be if one beef cow is equals to that is 30,000 naira. So 50 beef cow will be equals to 50 multiplied by 30. So 50 multiplied by 30, punch your calculator, you are going to be getting 150. That will be 1,500,000 naira. So the cost of 50 beef cow is 1,500,000 naira. So now I want you to pay attention. I'm going to be hex. Don't forget that the ruling interest rate is 5%. The ruling interest rate is 5%. Therefore, I'm going to be estimating interest of 1,500,000 naira. So if I want to estimate the interest, what I'm going to do is that since they gave me that the interest rate is 5%, so I will put interest 5%. Interest 5% on this 1 million. I'm going to be having 5 all over 100. Don't forget, multiply by 1,500,000 naira. So I'm going to be having 0.005 multiplied by 1,500,000. Punch your calculator. Okay, the interest is 75,000 Oh, I don't put naira. So the interest is 75,000 naira. This is the interest. So since I know that the interest is 75,000 naira, it is this interest that I'm going to be adding to all my fixed costs. Are you getting it? Don't forget, this is the interest that I'm going to be adding to all my fixed costs. You know, if you look at the yes, if you look at this, all these costs, I told you that it's separated into variable cost and fixed cost. So it is this, the fixed cost of this is cost of beef cow. The fixed cost in this place, distribution interest charge. When we have the property tax, which is also fixed cost. So I'm not going to be adding that 1,500,000 naira. I'm going to be adding the interest on the beef cow. I'm going to be adding it to all these fixed costs. So let's proceed to get our total additional fixed cost. Therefore, now to get the total additional fixed cost, the total additional fixed cost will be the costs, the interest on cost of beef cow, the depreciation interest charge, and the plus the property tax. So that will be the total additional fixed cost. So let's proceed. The interest on beef cow is 75,000 naira. So I'm going to be having 75,000 naira, 75,000 naira, oh naira, 75,000 naira. Then plus depreciation plus interest charge, which is 9,000 naira. Don't forget that's also a fixed cost also. So plus property tax, which is what, 3,000 naira. 3,000 naira. So I have all these three. If you sum all these three together, that will give me total additional fixed cost. Yeah. Total additional fixed costs. So all these together, that will give us the total additional fixed costs. So that is 87,000 naira. 87 and 87,000 naira. So the total additional fixed cost is 87,000 naira. So let's find the variable cost also. Let's find the variable cost also. The next thing to do is to find the variable. If we want to find the total additional variable cost, we have to add all the variable costs together, including the cost of veterinary and health, and then find the interest rate and add the interest rate to total. That's what I'm going to be doing right now. Just follow me carefully. So let's add all this together. We have the 45,000 naira, and don't forget this is also variable cost, 45,000 naira, and pasture and fertilizers. The miscellaneous expenses also part, 45,000 naira plus 3,000 naira plus let me add it one by one. Let's watch out for our variable cost in this place. We have the pasture and fertilizer is also variable cost. So I'm going to be having 45,000 naira, 45,000 naira plus pasture miscellaneous expenses also a variable cost. So I'm going to be having 45 plus 3,000 naira, 45,000 naira, 45,000 naira plus that is 3,000 naira. That is for miscellaneous expenses plus plus oiling and oiling. Yeah, don't forget oiling is also known as transportation. That is 6,000 naira plus cost of feed is also a variable cost. So that is 60,000 naira plus 6,000 naira plus 60,000 naira plus 6,000 naira for transportation, 6,000 naira plus 60,000 naira, which is the cost of feed. So let's punch our calculator and add all this together. So we have 114,000 naira. 114,000 naira. 114,000 naira. So I'm going to be estimating the interest rate on this 114,000 naira. Don't forget that the ruling interest rate is what? The ruling interest rate is 5%. So 5% is also 0.05%. So I'm going to be estimating the interest rate on this. Interest is what? Interest will be 5 over 100. Interest on this multiplied by 114,000. 114,000 naira. So multiply this by 0.05. 0.05. I'm going to have 57 or 5,700. That's 5,700. So the total additional variable cost will be the this interest rate, addition of this interest rate with the total additional variable cost. You know, after adding this is what it gave us. That's 114,000 naira. So after looking at it, we realize that we estimate the interest of this and we got this. So the total additional variable cost will be the summation of 114,000 naira and 5,700 naira. So that total additional, let me just put it, total additional variable costs is equals to 114 114,000 naira plus 5,700 naira. 5,700 naira. So let us. That is 119,700 naira. That is the total additional variable cost. 119,700 naira. So this is the total additional variable cost. Let's proceed with other costs that we have in the questions. Yeah, there was a mistake here. We're supposed to add the veterinary and health is also variable cost. Yeah, how are we going to do this now? Let's go back to that variable costs. Let's go back. Yeah, there was a mistake. Veterinary and health is also a variable cost, and we didn't add it to all these variable costs, and so that's what I'm going to be doing right now. All this is wrong. The total variable cost, this is wrong. We didn't add veterinary and health, so I'm going to be doing that in the next calculation. Just add all this. I'm going to be adding all this, which is 114,000 naira plus 15,000 naira. Then I will estimate the interest rate and add it to the total. That's what I'm going to be doing. That's where I made mistake. So just pay attention. So let's have our new total additional variable cost as this. Total additional variable cost. Let me write it in full. Total additional variable cost. It will be the 45,000 naira, 45,000 naira plus 3,000 naira, 3,000 naira plus this also 6,000 naira plus 60,000 naira, which is the cost of fuel, 60,000 naira plus. Then I will have my veterinary and health. Veterinary and health, I told you, is also part of the variable cost, and that's where I made mistake. I didn't include it, and it's also part of the variable cost. So I have plus 15,000 naira. That is for veterinary and health. It's also a variable cost. So after adding all this, the total is what? So the total now become The total now become 129,000 naira. So this is the new total. So after getting this, we're going to be estimating the ruling interest rate, which is what? 5% interest. Let me put it interest 5%. Interest 5% on this. I'm going to be having 5 all over 100 multiplied by 129,000 naira. 129,000 naira. So if you add this, multiply by 0.05, that's 6,450 naira. 6,450 naira. So it is this interest that I'm going to be adding with this to get my total additional variable cost now. Total additional variable cost, let me put it down. Total additional variable cost will be this, the summation of all this, which is 129,000 naira. 129,000 naira plus the interest that I got on this, which is what? 6,450 naira plus 6,450,000 naira. So after adding this, I'm going to be getting plus. So we have 135,000, 135,450. 135,450. So that is the total additional variable cost. So this is total additional variable cost. So let's proceed with our other costs. And before we proceed, I want to show you how the partial budgeting table will look like. This is how it will look like. We have the additional cost, which is, as I already explained to you, that it is this is the cost that the farmer will be incurring as a result of changing from one enterprise to another. While the reduced income is the income that it will not be generating as a result of the proposed change, while additional income is the income from the new enterprise. That is the income generated as a result of the proposed change, while the reduced cost is the cost that the farmer is incurring on his previous enterprise, but it will not be incurring it on the new enterprise. That's the reduced cost. So I told you that the additional cost is divided into what? We have the additional fixed costs. We have the additional fixed costs, and we have the what? Additional variable cost. Additional fixed cost and additional variable cost. So and I've already calculated both. I've already calculated the fixed cost and variable cost. So I'm going to be I need to proceed to get my reduced income. So, but before that, I want to include in my table the total additional fees cost and total additional variable cost. Total additional fees cost is 135,000. Total additional fees cost is 135,000 naira. 135, 135. Let me put naira. 135, 450. So this is the total additional, no, variable cost rather. This is the total additional variable cost. Okay, now the yield of the new business. The yield of the new business is, now let's come to think of it. We have already estimated our additional costs. Now, the next cost that we have here is the yield of the new business, which is also known as the what? The income. Now, is this the yield of the new business? Is this which out of the tables that we have already estimated our additional costs. We have not estimated reduced income. We have not estimated additional income. We have not estimated the reduced cost. So that is the three parameters that remain. Now, if you look at this question, if you look at the next the next price that we have here, we have the yield of the new business. Yield means income. So my additional income now will be the yield of the new business, because that is the income that the farmer is going to be generating as a result of the proposed change. So on my table, on my partial budgeting table, I'm going to be adding 72,000 naira plus 17,350 naira plus 137,100 naira. I'm going to be adding it together. That is what you will see on the partial budgeting table. So I'm going to be doing that. Here, I have the 6 core cows at this price, the 23 steer cows at this price, and the 17 FI cow at this price. When I add it together, I got 426,000 naira, 426,450 naira. So that's it. Let's proceed to calculate our the yield from the grain. That is the reduced income. That is the income that it will be generating, that is generating on the grain before, but is no longer generating that income. That is the reduced income. So if I want to get the reduced income, I'm going to multiply 2,600 multiplied by. Reduced income is on the left hand side of the table. So I'm going to have 120 multiplied by 2,600 kilogram. The total is 312,000 naira. That is the total income that is generating before on the grain, but it will not be generating that income because of the change in enterprise. Therefore, this is the reduced income. So now, after calculating the reduced income, we are going to proceed to calculate our reduced costs. So now, let's proceed to get our reduced cost. Of course, that is the cost it will not be incurring again as a result of the proposed change. So that will be the cost of fertilizer, seed, herbicide, and machinery. If you add all these costs together, we're going to be adding 75,000 naira, 75,000 naira plus 30,000 naira plus 15,000 naira, then plus 24,000 naira. So that is 144,000 naira. So the reduced cost is not, if you want to get the reduced cost now, we are going to estimate the interest rate of 5% on the total, on the summation of all this, and then add it to the total. That's what I'm going to be doing. Just follow me carefully. So the reduced cost now will be the cost of fertilizer. Reduced cost. Let me write reduced costs. To get the reduced cost now, I will have the cost of fertilizer. That is 75,000 naira. 75,000 naira plus the cost of seed. That is grain seed. That is 30,000 naira. Then plus the cost of herbicide. Herbicide is used to kill weed, so we incur the costs. Plus the cost of machinery. Machinery is that is 24,000 naira. 24,000 naira. So if I add all these costs together, I'm going to be getting 114,000 naira. 114. Okay, 144. Oh, 144. 144,000 naira. So I'm going to be estimating the ruling interest rate on this. Ruling interest rate. Interest rate will be interest rate of 5%. That's 5%, don't forget. Interest rate of 5%. I'm going to be having 5 all over 100. 5 all over 100 multiplied by 144,000 naira. So 5 over 100 multiplied by 144,000 naira. That will give me 7,200. That is 7,200. So the Total reduced cost now will be what? The summation of this and this. Don't forget, it will be the summation of what you got when you had all the cost for fertilizer, seed, herbicide, and machinery together with the interest rate that we estimate. So the total reduced cost will be, let me add that. The total cost, the total reduced cost will now be 144,000 naira plus 72 72 72,000 naira. Oh, I think the estimation is kind of large. Let's try it again. The interest rate 0.005 multiplied by 144,000 naira. That's 72, not 7,000. That's 7,200, not 72. Oh, that's a mistake. Not 72, 7,200 naira. So I'm going to be having 7,200 naira. So addition of, when I had this together, I got 151,200. So this is the total reduced cost. Let's go back to our table and insert this. The total reduced cost now will be 151,200. So that is the total reduced cost. Now, you have completed your table. That is, you have gotten the additional cost, additional income, reduced cost. You have gotten all your table. Now, the next thing is to calculate the total of this. Add this together. What did it give you? Then after adding it together, what you have here, sum it with this. That's what I'm going to be doing now. 87,000 naira, 87,000 naira plus 135,000, 135,450. That's 222,450 naira. 222,000. Don't forget your naira. 222,450 naira. So this is what I got. So we have 222,450 naira. We are going to be adding all these, both of them together now. The reduced income, which is this, and the additional cost, which is this. Let's add it together. 312,000 naira. So that is 534. 534,000 naira, 450 naira. So after adding on the additional cost, which is this, and the reduced income, which is this, I got the total as 534,450 naira. Now let's proceed to additional income. I have already had all this together, so it gave me this, and this is the reduced cost that I got from my previous calculation. So the next thing I'm going to be doing now is to add all this and this together. So what I'm going to be doing, I'm going to be having 426,000 naira, 450 naira, that's this one, plus 151,000 naira, 200. That's 577 naira. 577 naira. The total for this one, let me put total also, as I have it in my right hand side. The total also is what? 477,000 naira. Yeah. So this is the total for this, and this is total for this. Now, you will not stop your calculation here. You have to get the net change in profit. Yeah, you have to get the net change in profit. And how do you calculate the net change in profit? The net change in profit is the total increase in profit or minus the total decrease in profit. In that case, I will represent my my right hand side table. Now we proceed to calculate the total net change in profit. The net change in profit is the subtraction of total increase in profit, which is this, and total decrease in profit, which is this. So I'm going to be subtracting 577 naira, 650 naira minus the 534 naira, 450. So that's what I'm going to be doing now. The total, the net change in profit will help you to determine the comments that you are going to give to this proposed change. The comment that you are going to give, as you know that the question procedure said that we should comment on our answers. So the net change in profit is what I'm going to be calculating now. Net change in profit. The net change in profit is total increase in profit. This is this. Total increase in profit 577,650 minus total decrease in profit, which is 534 534,450 naira. So after subtracting that, um, let me subtract. Okay, after subtracting the total increase in profit and total decrease in profit, I got 43,200 naira. That's what I got as my net change in profit. Now, if you look at this, the question asks us to comment. What do you want to do? Your comment will be based on, maybe you are going to advise the farmer to embark on the proposed change, or you are going to tell the farmer not to embark on the proposed change, and you are going to state your reason. From in this case, the comment could be because the net change in profit is low, because the net change in profit is low, which is what, 40,200 naira. Even there are some other unforeseen circumstances that can occur in the cost of the production of the beef cow. So I will advise the farmer not to embark on the proposed change, because as a result of this, the farmer will not be getting enough profit. So that's my own comment. In your own case, you can tell the farmer to embark on the proposed change and state your reason. If you are able to defend your reason, you have your full mark. Thank you very much for watching the video. I really appreciate you. And so we have come to the end of the solution. So please, I want you to subscribe to the channel, or probably you'll be watching this video after downloading it. Kindly go back to the channel and drop comments. Tell me how you felt about the video. Thank you very much for